speaker, Ken Berry, came to Sean and I probably 2 years ago and told me the same thing I've heard 20 times from junior companies, that he was going to put a gold mine into production. And I rolled my eyes, but we talked to Ken and he seemed like a guy who could actually do it. So in one of the worst markets the last couple of years, Ken's raised, I don't know, $70 million. And he's going to be pouring his first gold bar in 3 weeks' time. So the next producing gold mine in the US. Thanks, Ken.
Thanks, Colin. Thanks to Colin and his team for inviting us. And as Colin mentioned, we've been hard at work. The slide you see on the projector there is our site. We've had this property option since 2011, and we've raised about 80 million US for the project. So we put together close to 50 million during 2011 to 2015 when other companies were dormant or standing still. We were fortunate enough to have a good network and a good contact base over in Europe, and Tiziano Romagnoli is here with me, and he's one of the key figures, and his network and ability to raise funding helped us to move this project forward. So from that, in the last year, we've put together, we've attracted Sprott Lending, and we've also attracted Greenstone to the table. So we're in a position now where after this last 6 years, we're within a month, 6 weeks away from production. So with that, I'll move to the next slide. Okay, that's a standard disclaimer, and I'll pass through that. Maybe not. Okay, the key takeaways. We've financially de-risked this project. Specifically in the last 12 months, we have brought Sprott Lending to the table for 20 million US. We've drawn 15 million of that, so we have another 5 million at hand should we require additional funding here in the final stages. We also brought Greenstone Resources, and they're a UK fund. They represent US endowment money, and they have 11 investments under management. We were their 11th investment. They're currently have 2 funds with about 600 million in the funds. So they've backed us initially for 20 million US, and they'll go as high as 60 or 70 to look at other assets should those opportunities present themselves. We've also technically de-risked this project, and why I say that is we ran a test mining facility that produced over 20,000 ounces of silver and 4,000 ounces of gold. So it de-risked the project. It established our recoveries, 82% to doré. And this was a key reason why initially we had Macquarie come on board with a term sheet. We paid a break fee of about $250,000 to Macquarie to move to Sprott, and that eliminated about 67,000 ounce hedging program. It was much more attractive for our equity shareholders. So that was something that happened just over a year ago. And then we've also been able to establish with that test mining facility very robust economics. We're sitting at about 63% internal rate of return after tax, and that's at $1,250 gold. If gold were to drop back to $1,000, it's still a 25% return. So it's a strong project. We see the opportunity not just in good returns here in cash flow, but also with the exploration upside on that as well. And as mentioned, we expect to pour gold later part of November, first part of December. And it was about a year ago that I think I had the opportunity to hijack one of Eric's meetings as he was about to walk out the door. I was able to corner him for 5 minutes and threw the presentation down, and he rightfully pointed out that where's the exploration upside? Very profitable project. It's going to throw off about $1 million a week, net out about 24 million a year, but show me the exploration upside. So in the last week, we brought on 2 advisors who are 2 of the most successful geologists in the industry. They have 5 discoveries to their name, and I'll talk more about that. But they believe there's 1 million ounces plus on this property. So the shares outstanding, we currently have 172 million shares outstanding. In the last 5 years, we've had a high of $1.60, a low of 10 cents. We have, in the last year, had a high of 70, low of 35. We're sitting at about 50 to 55 cents currently. Trade just under 100,000 shares a day. We have working capital of about 20 million. It's actually 20 million US currently. and we're sitting with an additional $5 million that we can draw from the Sprott Lending. Our key shareholders, Greenstone. We also have Gold 2000 out of Zurich, hold about 7 or 8%, and then there's many high net worth private banking individuals through Tiziano and his network. Tiziano, just to expand on that a little bit, was a former representative for BMO in the Geneva office for about 7 years and has worked in New York as well, but has had stakes in Grade Resources, one of the largest shareholders when that was taken over by Agnico, and also backed Alamos early on, so has had a lot of success in the resource sector. And in terms of management teams, yes, we feel we've got a very strong management team. We have individuals in finance, operations, and technical side of the business. On the finance side, Dave Farrell worked 12 years with Endeavor Financial, did their M&A for Frank Schuster's group. So very strong. We also have Mike Haworth, who is one of the founders of Greenstone and represents that $600 million fund. And we have Joe Bardswich and David Stone, who are our mining engineers on site. We just added Bill Martinich. He came over from New Gold, and Bill is about to sign on a few other key individuals that will be jumping from other mining companies to us. So those should be announced in the next few weeks. We have Gord Ulrich on our board. He ran 11 producing mines when he was the CEO of Luscar. Jim McDonald, one of the founders of National Gold, which merged together with Alamos and sat on the Alamos, the Mulatos Project Technical Committee for 10 years. And then we've added Perry Durning and Bud Hillemeyer on the exploration side. So one of the areas that we're quite proud of is during this challenging time, 2011 to 15, we were able to raise that funding necessary to advance this project. We completed about 470 drill holes, did a resource calculation, a PEA, did a test mining facility larger than any other that I'm aware of in the last 5 years. And then we went to a bankable feasibility and then established the term sheet with Macquarie, which really gave us the ability to attract the Sprott Lending, and that pushed us into the building stage last December. And then in the last year, in addition to adding Sprott, we brought the Greenstone on, Greenstone financing. We also have CAT financing. We have $9 million line available to us. We've drawn on $5.5 million of that. And then in the last couple of weeks, we published a mine extension report. So our feasibility initially had outlined 5-year production. We've pushed that out to 10 years. And the numbers have gotten stronger as well. So what are we looking for in the near term? Production. We did meet that mine extension, as I mentioned. We'll appoint additional team members. And then we've got our first gold pour. We also have a power line, which is something that we didn't outline in the feasibility study, but we've been able to put together with the local stakeholders. So our feasibility study had outlined generators. We've purchased those generators. We've actually got a power, we're within months of permitting a power line. That'll save us about $15 million in diesel over the first 5 years. So it, again, pushes the economics, makes it very attractive. Sorry, just had a little, there we go. This is a location map. One of the areas, I think one of the most attractive things, aspects of this project is the jurisdiction. So this is an hour-and-a-half south of Las Vegas. You can drive down in the morning, be back there by 4 o'clock in the afternoon. It's 20 minutes outside of the town of Bullhead City, so our workforce can live at home with their families, travel to and from site, leads to low turnover rates. And then we're 3.5 hours west of Phoenix. So you've got Phoenix, Las Vegas, you've got an airport that can land a 747 within about 20 minutes of the site. So we don't have to carry a lot of inventory. Our manufacturers of the crushers, conveyors are 50 minutes to the north. And the area has produced about 2.5 million ounces, and it has over 200 mining disturbances on our property alone, so excellent exploration upside. This is a picture of the mine site layout. It's an elongated pit. It's open to the west and the east. It's also open at depth. And then, as I mentioned, there's over 200 mining disturbances on this property that we will start to put together a program here with Bud and Perry's assistance over the next 6 weeks. This is overhead, shows you why this is a low-cost producer. Basically, that's the ore body coming right to surface there. It's a ridge that runs for over 2 kilometers. The mine pit area that we have the resource covers about just over 1 kilometer. So it is open on strike. It's also open at depth there. But it's very, very straightforward. When you get on site, you see this ore body coming to the surface. The strip ratio here is about 1.8 to 1, so low strip ratio. This is our mineral resource reserves. What you'll notice here is it's just under 500,000 ounces. We have focused on putting this into production. The 470 drill holes that we put into this property, that followed up on about 220 drill holes historically. We've done very little work outside of the resource. That's something that we'll focus on now as we move into production. But during that challenging market, we had the ability to raise funding based on cash flow, based on going to production, and we would have been in that top 5% of funding during that time. Sorry, we're just having a little trouble advancing these. But okay, this is a picture of the test mining facility. It covered about 2 football fields in length. We processed 125,000 tons. It yielded 4,000 ounces of gold, 20,000 ounces of silver. But the I think highlight of this was the recoveries of 82% to doré. And why is that important? We've seen over the last half a dozen years many companies move from the lab into production and they stumble. So there's been cases of that dating back. Well, Alamos was, I always like to use that because Jim McDonald was on the board of Alamos at the time. They expected a 70% recovery and got 37% recovery in their first 2-3 quarters. So it's something that they had to overcome, and obviously a strong company and went on to be very successful. But others more recently, smaller junior companies don't survive that. So that's something that when we had Macquarie, Sprott, Greenstone, Cat look at this, they said, okay, this test mining facility has really taken away a lot of that technical risk. And here you have, this is a feasibility study, and we had initially mapped out 5 years of production. And the reason it was limited to 5 years was to stay on patented private land. At that time, we thought that the permitting would be more streamlined to contain our activities to the private patented land. We've since developed relationships, strong relationships with the BLM, local authorities, the city, the county, and the state. So what we did is we've lifted that sort of constrained boundary on the private patented land, and we've moved out to a mine extension report. But initially here with the feasibility, you can see some of the highlights: 1.6 to 1 strip ratio, 82% recovery to doré, initial capital expenditures 33 million, all-in sustaining costs 662, and after-tax rate of return 48%. Now, in the last few weeks, we published a mine extension report based on an additional 200,000 ounces, which is contained on private land, but we required that federal permit to be able to go out with our waste dump. So, as I mentioned, relationships are very good with the BLM right now. We're permitting, months away from permitting this power line, and we'll also have, we expect to have the ability to move out in year 4 or 5 onto that federal land. And what does it mean to us? It means a 10-year mine life. It means a 63% internal rate of return versus that 48% return. Strip ratio is 1.8 to 1, so it moves up a little bit, but still under 2 to 1. And our all-in sustaining costs are $603. So the numbers get stronger with this project. Payback is 1.8 years, so that's very favorable. We don't have any penalties on prepaying back our Sprott Lending funding. So this is our construction schedule. So a year ago, December, we started building. We have all the equipment on site. It's all been assembled. We're currently wiring it up. The electrical is sort of the final stages. The heap leach pad is within a couple weeks of loading. So we expect to be pouring gold by that last week of November. And these are just some of the, this is the crushers and conveyor system, and we upsized all our crushers as well so that we can scale up that production. So we're sitting at about, initially the feasibility called for 19,000 ounces the first year. We're gonna go to about 28,000 ounces the first year. We'll go to about 46 the second, 54 the third, and 60,000 ounces the fourth year. So we have the ability to move up and scale up on the production. And I'll just flip through a few of the photos. Again, these are some of the crushers, conveyors that are on site, and Goodfellow and KPI did the work for us on that. Goodfellow is about 50 minutes north of us. This is some of the earthworks on the heap leach pad. It's about 15 acres of pad laid down within a couple of weeks of loading that. This is the Merrill Crowe facility, and a Merrill Crowe facility gives us the ability to pour doré, and it primarily moves up the recoveries of silver. So we're at about 65% silver recovery. So this project will have 90% of the value will be in the gold, 10% will be in the silver. And I briefly talked about the power line. This is initially, we had spec'd this project on generators, and we had a price to put in a power line. There's two power companies in the region, one to the east of us about 4 miles away. They gave us a price of $13.5 million. We thought that was far too high, so we held off. We spec'd the project out on generators. We've purchased those generators, but in the last year, we worked out a deal with a second power company within the city of Bullhead, about 8 miles away, and working with the city, the county. We now have the city donating a piece of property at the city limits. We'll run the power line to the city limits. The county has given us the authority to run along their right-of-way on the road leading to the mine site. And the BLM, they're the final decision maker here, and we believe we're down to the last months, and their decision is, do they allow us to burn 15 million worth of diesel in 5 years, or pass this power line, give us the ability to run clean power. It reduces our expenditures. Power costs with diesel are up over 20 cents, and with hydropower it's about 6.5 cents. So there's also the ability to sell the aggregate or waste rock. We hadn't anticipated this originally, but the city of Bullhead really wants our waste rock or riprap rock 10 inches to 30 inches. We've also got the local cement companies in the area that are interested in the rock as well. They're running out of aggregate, and they're talking about shipping as far as Las Vegas. So there's a market for that. Now, and again, this was spurred on by meeting with Eric, but we believe we've attracted two of the best geologists, most awarded geologists. These fellows have 5 discoveries to their name. They've done very well in the business. They've got, as you see up there, multiple discoveries. San Sebastian, 70 million ounces silver. San Agustin, 850 ounces gold, 26 million silver. Pitarella, 526 million ounces silver. And Camino Royale, 7.5 million ounces gold. And most recently, Los Gatos. And this is an electrum project, and it's held privately, 178 million ounces silver at over 602 grams. Now, most geologists, I've been in the exploration business and development business here for the last 15 years, and I wish, anybody that has a record like this is phenomenal. So these guys are developing a program for us. They have a database on the area. We've got exclusive sort of rights to them within our area. And so we're looking forward to putting that exploration program together, testing out some of these over 200 mining disturbances on our property and looking at the region. And they believe that there's a discovery to be made here. But every 50 or 100 or 200,000 ounces will make a big difference to us as a producer. This just shows you the Oatman district. It produced over 2.5 million ounces of gold. Many untested targets in the area. Our moss structure is open on strike at depth. The United Eastern is one of the higher grade or richest discoveries in the area. It just demonstrates that there's not only low grade possibilities here, there's high grade opportunities. This was a 770,000 ounce discovery at over 1 ounce per ton. So there is those high grade opportunities on this property and in the region. And so there's a lot of work to be done, but a lot of upside as well. This is just another layout. The arrowhead in the middle there is where we'll be working on the moss structure, and then some other targets in the region. But as I mentioned, Bud and Perry will be putting a program together over the next 6 weeks here, and we'll roll that out, and we'll be looking to launch a $10 million exploration program on this area. In terms of stakeholder relations, we've worked closely with the city and the state. At our test mining facility, we had over 350 people attend the ribbon cutting. We had the governor there. We had state officials, city officials, local tribes. We've created an information or tour center in the town of Bullhead City. We've also created geoscience programs with the local high schools that are feeder systems into the Phoenix area universities. So all-in sustaining costs were in the lower quartile. Mentioned that earlier. I'll flip through these. Internal rate of return, again, very strong internal rate of return on this project. We expect it to gross about $1 million silver, gold, doré per week. Upcoming milestones, we're going to continue to strengthen our operational team. We've got a very strong finance team, as mentioned, and now the operational team led by Bill Martinich will be rolled out over the next few weeks. And that's going to be important here as we kind of get into this final stage of commissioning. And we expect to pour the gold here before the end of the year. Bud and Perry will launch that exploration program. The power line, that'll be sometime by the end of the year, shortly after. U.S. consolidation strategy. I think the market here in the U.S., especially for under 100,000 ounce producers, will likely go through some consolidation, whether we're initiating that. We have the backing of Greenstone, Sprott, but we may be a target as well. At that last conference, the Denver conference, I think we met with 4 senior companies to us who we'd probably make a difference to them. So aggregate sales, as I mentioned, that's part of our waste rock, so anything there is a bonus to us. And that last slide was, if I can get it on here. Okay, I'll skip. The slide before that was a chart. Basically, the typical mining cycle development chart. We saw that during the exploration phase, that $1.60. We fell back to a low of 10 cents. That was the market had pulled back. We also went through about 1.5 years of arbitration before we acquired our 100% interest in the property. So that cost us about 1.5 years development. In hindsight, it may have been the best thing for us because it was a challenging market at that time. But the highlights, just to review, financially and technically de-risked, robust economics, first gold pour before the end of the year, the blue sky exploration led by Bud and Perry, and we're positioned for U.S. consolidation. So with that, I'll open it up to any questions or comments.
I really want to see that slide before. It's the Lassonde curve, right?
I believe it is. Or it might have been the Sean curve. I think you've published it as well. There it is there. So that's our chart at the top. You see the $1.60 high, low of 10 cents. We're sitting in around 50, 55 cents right now, and we're in that final stages of development as we move into production here. So we're excited about it. We've got a lot of work that's been behind us, but we are still very focused on this commissioning. And what gives us the optimism here is that we did do that test mining facility. So we had the success with that test mining facility, and that's an area, the recoveries are an area where others have stumbled and haven't been able to recover. So no, we're very optimistic about the future here. And as I said, you'll see us track some additional operational key players that will likely jump over to our ship. So, all right, thank you very much. And
think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?